downloads and streams. It's Buffy for sale.
Hey y'all, hey, I wanted to go live. I just finished doing All About the Tea, and yesterday when I did my live with Sean Brooks, there were a lot of questions about taxes, and I was not able to answer taxes with regards to owning a small business or being in the gig economy as a consultant. And so I wanted to pop on here today real quick and answer some of those questions. I jotted some of them down. So there was one question about, hi, Candace. Hi, Alicia. Did you get in touch with Sean? Please message him about the prize. Hi, All Things Exquisite. Hi, Simbi Davis. So if you were one of the people who had questions yesterday with regards to taxes and small business, feel free to ask me today. I'm just going to pop on and answer some. I had like 7 questions that I didn't get around to yesterday. Hey, MPT. And I always want to get to everybody's questions. The show wasn't, good, Alicia, good. I hope I'm saying it right. Alicia or Alicia. Hey, Lucky, June. So there was one question, and again, like I said, if you have any questions, anything, you can ask me anything right now, child. I've got time. Feel free to put it in the comments. But there was a question about, it was someone who works in the gig economy, and my eyes are red because I've been laughing and crying on All About the Tea show about the Potomac finale. So that's why my eyes are red. Hey, Rach. Hey, girl. Thanks for doing this. I'm hoping you would bring that top is go. Oh, thank you so much. Okay, so someone asked about being in the gig economy. I think the person worked as an Uber driver. And the question was, do you need to get an EIN number if you're a 1099 contractor? Hey, we did cut up today, Monica. And so if you're in the gig economy, I think meaning you work gig to gig, you don't have a W-2 job, you're a contractor. Hi, Amber Hollander. I think a lot of people think that hi, Nafisa's daughter. I think a lot of people think that they're still an employee. You're not an employee when you don't have benefits, when there are no taxes withheld from your check, when you receive the full check. And I mean, with Uber, I think it's a bit confusing because they do hold the fees to pay for renting the car, if you're renting the car from Uber, or repairs and maintenance and all that. And so you can get a stub that looks like there are deductions on it, but those are just tax expenses that you can deduct. And so the question was, should I use my social security number or should I get an EIN number? I always say get an EIN number. You can go to irs.gov and search for instant or online EIN, and it takes you 5 minutes and it'll generate the tax ID number for you online, print it out or save it to your desktop if you're going to save trees. And it's just best, especially in this identity theft environment, to, especially if you're working multiple gigs, and sometimes you don't work for major companies like Uber that are going to safeguard your information, to just be giving everybody a social security number. So I'd rather you have a tax ID number. And then also, if you are self-employed, if you're a contractor, then you need to treat it like it's a business. And so it should be separate from you. And don't pay anybody. I've heard people say they paying folks $200 and $300 to get a tax ID number. No, don't do that. You can go to irs.gov. And if you can't figure it out online, you can call the IRS at 1-800-829-1040. I'll put this number up. You can tell I've been doing taxes a number of years. They've never changed the number. It's 1-800. Hold on. Why is my keyboard acting funny? Give me a second. Monica was like, Buffy goes live every day. So I was like, let me get my butt on here. and answer these questions. Okay, I can't put it on. It's 800-829-1040. All right, so let's see. I have some other questions, but I'll take some of y'all that are here. There's a finance person that keeps talking about starting a small business with self-proprietorship. What about an LLC? I thought LLC protects you. Okay, good question. So an LLC, a limited liability company or a limited liability corporation, whatever people say, a lot of people get confused about what in fact it is. An LLC is a state designation. It's only recognized by whatever state that you live in. And yes, if you go to the Secretary of State and you establish articles of organization for your LLC, you are protected as long as you running your business properly, because there are ways for people to pierce that corporate veil. But the place where people get confused is the IRS does not recognize LLCs as a tax structure. So you can have an LLC and the IRS may send you paperwork that says XYZ LLC and your address, and you think that's enough. It's not. When you establish an LLC, it's a state designation only. You then have to tell the IRS how you want your LLC to be treated for tax purposes. So with your question, this finance person that was talking about starting a small business as a sole proprietorship, you can be an LLC and be a sole proprietorship for tax purposes. You can also be an LLC and be an S Corp for tax purposes. So that's probably what they're talking about. And I always tell people who come to me when they're first starting their small business for a consultation that it's best to crawl before you ball, even in business, and set up your legal protections, because you just never know. We live in a very litigious society, and your business could blow up overnight or not. Sorry, y'all, my lips dry. I've been laughing all about the tea. They dry. And you don't want someone to be able to go after your personal assets. You want to protect them from the business. And so, but having said that, when you first start a business, there's not a lot of there, meaning money for you to pay people like me to deal with the paperwork, the corporation paperwork. And so to keep your book straight when you first start, you could be an LLC for with the state to protect you legally, but you could be a sole proprietorship for tax purposes, meaning if you just had a business account and you maybe occasionally commingled funds and stuff like that, it's not good, but it's not going to be like the end of the world, like if you were an S corporation. So it's best to start as an LLC, sole proprietorship. And then I tell people, when you're profiting, not making, meaning profiting after all expenses, after you start profiting in a calendar year, $50,000 or more, then you should have a conversation with the tax consultant about changing your entity structure. And the good thing about an LLC is if you file your LLC and you start as a sole proprietorship, you can change later to an S corporation or another type of entity structure without having to start over. It's just paperwork you send to the IRS. So that's why a lot of people like LLCs. Let's see. I hope that answered your question, MPT. Let's see. Should I get a tax consultation? I want to know what all I can write off. So, Alicia, it depends. Do you have a small business? If you have a small business, and you don't have wage-based pay and it's your focus and you're really trying to grow it and you really want to set up a tax strategy for the business, yes. If you are wage-based employed and you have a side hustle and you file Schedule C, I would say, and I don't even like turbo crap, but tax software is fine, really, for that kind of thing. You said yes to my question about it being your full business. If it's your full business and you really, yes, you need to talk to someone, because there's home-based business. Good. Yeah, because it's more than just deductions. So this is a good question, actually, Alicia. It's like if it's your full business, right? and you know in 2 years you want to buy a house, right? Then you don't want to write off everything under the sun on your taxes, because you need to show income so you can use those tax returns to qualify to buy a house. But if you write off everything under the sun, it reduces your taxable income, and that's what underwriters look at. So you could make 200,000, but if you write off 150,000, the underwriter's going to say you only earned 50,000, and then they're going to qualify you for your house based on 50,000, not 200,000. And so a tax consultant can help you figure that out and navigate that, and plan, because a lot of it's planning. I don't like to do, when I was still preparing taxes, because I don't anymore, I gave my sister and her son my tax practice, and my mom stayed on to help her run it. But when I was preparing taxes, we don't like reactionary accounting. When you own a small business, you need to see your tax consultant throughout the year. I can make 1 + 1 = 0 if I see you throughout the year. But if I see you in January, the year is over. There's not much I can do. It's really data entry. So I hope that answers your question. Oh, good, MPT. I'm glad that answered your question. Oh, thank you, Mrs. Gary, about my hair. Let's see. Hi, Buffy. You started to build credit with a credit card. I was about to close my credit card because the purchase interest is extremely high. Never close credit cards, like Brian Ponder said. You can pay the credit card off, but don't close it, because then you end that length of history of you having had that credit card. So keep it open, use it occasionally, and so that they keep it open and that length of credit continues, because a large part of your score is how long you've had access to credit. And so a lot of people of color find that why they can't get to an 850 or now a 900 credit score is because they didn't start establishing credit until 25 or 30 years old. We need to start establishing credit at 18, as soon as you can. So never close a credit card, even if it's high interest. Pay it off. You don't have anything on it, so it's not hurting you. And charge on it occasionally so they don't close the account on you also, but never close an account, which was great advice from Brian Ponder. Let's see. What if your spouse is wage-based and you have a small business and you file jointly? Will write-offs reduces the spouse's taxable income? Good question, Rach. Yes. So if you have a spouse who, gets a W-2 for $100,000 a year, and you have a Schedule C, a sole proprietorship, small business, and you have a loss of $50,000 from your business, well, then both of you on your married filing joint return will then be taxed at $50,000 instead of $100,000 of what your spouse made. And because your spouse paid in taxes on that wage-based income at $100,000, you'd likely get a tax refund. But again, remember, if you and your spouse want to buy a house, or if there's something in your future coming up that you want to purchase, whereby somebody's going to be looking at those tax returns, you want to lay off on a whole bunch of writing off expenses, even if you legitimately can. Let's see. So is a tax consultant the same as an accountant? Yes, pretty much. I mean, accountants typically, have a bachelor's degree. Some tax consultants maybe didn't finish college or didn't go to college and went the route with the Internal Revenue Service and became an enrolled agent and specialized in tax. So like I went to college, but I dropped out my senior year because I was making more money than my professors. And I hid it from my family. I'd already had my business. I had bought my house when I was 19, and college wasn't difficult for me. It just became unnecessary. And I just took tests. I became licensed insurance agent. I became licensed with the IRS. And so if someone says they're a tax consultant, they are probably licensed with the IRS and maybe not the traditional accountant route. Yeah, staff accountant, Simone B, is different than someone saying that they're a tax accountant. So yeah, you can be a staff accountant without a degree. Let's see. I don't recommend, I can recommend my sister, Courtney. Alicia, are you on my, I can't type in the thing. The company is Tax Heiress, TAXHEIRESS. She rebranded it. It's hers now. Her name is Courtney Sneed, and my sister actually is an accountant. She didn't drop out like I did. And she's actually studying to become an enrolled agent, which means she could represent you in U.S. tax court. And she worked with me in my practice for 20 years. She's brilliant. So yeah. And you can also go to irs.gov and look up tax accountants and consultants in your area. They do a good job of helping with that also. TAXHEIRESS, like heiress, like we're the heiress to our family's tax business. Yeah, tax heiress. If you just Google tax heiress, it'll come up. And then just say you were on my live, and she'll take care of you anyway. But yeah. And my mom works in the business too. You'll likely speak to her when you call. Let's see. I'm gonna get to someone asked on Sunday about business plans. Business plans are for banks and for investors. Everybody would always tell people, oh, you need a business plan. It's 30-page long business plan. I don't believe in that. You just need to have a clear vision, like Sean and I yesterday on my live said about what it is that you want to do. Be laser focused. Don't get in the weeds with, I want to do 8 million businesses. I want to be a serial entrepreneur. Like when I started, I wasn't trying to be a serial entrepreneur. I had a tax practice. I had, and then I got that to where it was running properly and other people could run it for me. And so then I became a life insurance agent and a property and casualty agent. And then, and then I could get that to run for it properly. And then, I went on to something and I became a licensed mortgage broker. And then I hired people who could run that for me. And then I moved on to the next thing. And so, you need to spend time, get the first business running properly, hire quality people, pay them extremely well, and let them run the business for you. And when it's running on its own, then you can jump out and start something else. Okay. Mrs. Gary, this is a great question. Do you agree with going exempt for 1/2 of the year to avoid paying too much in taxes? No, I do not. I do not, because you're playing with fire. Now, hear me on this. I also don't believe in giving the government an interest-free loan. So this is what I'm saying. If you're somebody who's good with savings, if you've got good money in savings, and if tax time comes around and your accountant tells you owe $10,000 and it's nothing for you to just go in your savings or your checkings and write that check and pay it, then you could go and zip half of the year, right? But that's not most people's reality. Plus, I don't really want you going to your savings to pay the IRS anyway. So my thing is, I tell my clients that you need to meet with a tax consultant or a tax accountant to help you figure out how to fill out your W-4 and state withholding forms properly. See, payroll is not going to tell you how to fill it out, because if they screw it up, you could sue them if you end up owing the government. But a tax accountant or a tax consultant can tell you exactly, especially if they've prepared your taxes, they can tell you exactly what you should put on your W-4. If it needs to be married withholding at a single rate or head of household with 2 dependents. That form is not normally exactly what your tax makeup is. So just because you're head of household and you have 2 kids, but if you make $300,000 a year, you may need to claim single so you can withhold more money, right? And so you need to talk to a tax accountant about filling that form out properly. And actually, you can go. I think the IRS has a tool on irs.gov, and you just click W-4. And it'll kind of help you. And what's supposed to happen is you're supposed to withhold exactly or as close to exactly what you're supposed to withhold during the year. So if you're supposed to pay $10,000 in federal taxes, you pay $10,000 in federal taxes, or you pay $9,800 in federal taxes. And then when you file your tax return, you just have to send the IRS a couple $100, or you overpay at $10,200 and they give you a refund of a couple $100. That's the way it's supposed to work. Like I used to get clients to come in our practice when I was still preparing returns. And if you got like a huge refund over a couple $1,000s, my staff was trained to immediately make you pull up your W-4. We would pull one out and we would go over it with you and help you fill it out for you and your spouse, get you to sign it and tell you to go turn it in to your payroll department the next day. Let's see. Very good question though. Mark, you're not late. I just decided to go live. I'm going to do this daily. Um, yeah, meaning HR staff. Yeah. Let's see. A lot of them don't know how to tell you how to fill out W-4. You're correct, Simone. They don't. And they could get in trouble if they screwed it up. Let me see. She said something else too. 2019 was messed up because I believe they changed it mid-year. Yeah, there's a lot of people complain with now where it's like this online thing where you can change the W-4 online, that sometimes things get screwed up and your withholdings get changed, and you end up owing and you didn't know you changed it. But also a lot of people will, this is really what happens. What I found out when I was still preparing taxes is you'll get a bonus, and let's just be real, folks will get a bonus. They will change their withholdings and claim 9. So they won't pay a lot of taxes so they can get as much of that bonus as possible. And then they forget to change the W-4 back after the bonus. And then you get used to that bigger check and you're like, oh, I'll deal with it later. It's fine. I'm going to have some write-offs. And then tax time comes and you end up owing the IRS $8,000 and you're in a mess. So it's best not to play with those withholdings if you don't have sufficient savings or money to deal with a potential liability should you have one. If you're not talking to a tax accountant, that can help you be very exact in what you're withholding. Let's see. Somebody else had another question. Hold on, I'm scrolling back up. Hey, pretty Mrs. G, did you email me? Email me at hola@buffyllc.com, HOLA@Buffy, BUFFIE LLC.com, so I can put you in touch with Brian Ponder. She won the credit consultation with Brian Ponder. Scrolling back up to see if there are any other questions. Let's see. If I change mine, it's at the beginning of the year after I file. Well, Simone, I ain't worried about you. You an accountant. You know what you're doing, I'm sure. I think you probably have a good grasp on how to do it. You're welcome. You know what? I've been kind of coming on randomly, but I will try to, what happens is I try to come on like when I have a break in my day or a cancellation with a client. And so what I would advise everyone to do is, if possible, click notifications on the subscription, and then you'll be notified when I go live. But thank you for watching. How difficult was it to become a mortgage broker? It was kind of difficult for me because I was 20 years old. And so I am 42 now. So that was 22 years ago. And I think the regulations were really tough back then. And then given that I was so young, I was put through a lot, but I had to take a 40-hour class, pass an exam. Then I had to pass a FBI background check. You have to have pretty good, amazing, excellent credit, obviously, because you're going to be exposed to everyone's financial information, being a licensed mortgage broker. And then I had to get like errors and omissions insurance and like a surety bond. And I forget how much the surety bond had to be, but it was totally tied to credit. And luckily I had good credit. So yeah. But I mean, I don't know the regulations now. Again, this was 22 years ago and I got out of the business. I sold my mortgage company in 2008 because I saw the end was coming. Like when people started coming in my practice telling me, oh, I should qualify for a $500,000 house, when I told them they qualify for a $200,000 house, I knew it was over. I knew there was too many shady loan officers out there telling people to do fraudulent stuff, and I would refuse to do it because I just wasn't about to have somebody ruin their life to be around here fronting to be in a house. Thank you all about the tea. Pretty Miss G. Oh, good. Send me an email and then I'll make sure you guys get in contact with each other. So yeah, let me look at my time. I was trying to listen to my good girlfriend who told me, even if I come on for 15 or 20 minutes a day, I think we've been on for 25 minutes. But if you should have questions for me, oh wait, somebody asked another question. Hold on. This may sound ignorant, but what is the difference between a W-2 and a W-4? No question is ignorant, Leslie. Nothing is like, it's crazy not to ask the question, right? And there are lots of things I don't know, child. Lots of things. So, like, I didn't know how to smooth this lace front down. So I had to get help from somebody. So let me answer a question. A W-2 is your annual tax statement. It basically says how much you earn from your employer, what you withheld from your federal taxes and your state taxes, Medicaid, Social Security, all that. Your benefits are shown on the W-2, and you use that tax form to file your taxes. A W-4 is your withholding statement. So you've completed W-4 and a state withholding form if the state you live in is not an intangible state. And you tell your employer how much you want withheld in taxes on the W-4. So you say, I'm a single person with no kids, or I'm married with 3 kids. That's the difference. So the W-4 is for the payroll department so that they can withhold your taxes properly. And the W-2 is what the payroll department gives you at the end of January so that you can file your taxes. It's a very good question, actually. Let's see. I got another question. Hold on a second. My question is, if you didn't have taxes taken out of unemployment, will you be penalized? You can be. The answer is yes and no. So it depends on how much in unemployment you receive. If you receive $15,000 in unemployment and you didn't withhold any taxes and you didn't have any other income, you could be penalized. If you receive $500 in unemployment and no other income, you probably are fine. So the best bet is to have it withheld. Just go ahead and do it just like it's a job. Because it is income. It's not earned income. It's unearned income, but you can still be subject to taxes. Yes, Alicia, it's tax heiress. You're correct. TAXHEIRESS.com. Oh, you need to be best friends. Let's see. You're welcome. You became a loan officer. Oh, cool. You should become a broker. Then you keep all the money. You can employ other people. And if you're an LO and you receive a 1099, I hope you're treating it like it's a business and you have a tax ID number and you're deducting because y'all have lots of expenses. All right, y'all. Well, if you don't have any other questions, I'm gonna hop off and get back to my other job and my other clients. Okay, should you file? Hold on one second. Should you file tax return if you're on unemployment? Yes. You know why? Because the people who didn't file your tax return with unemployment were the people who had the most difficulties receiving the stimulus payment. I mean, there are many reasons why, because you may be subject to taxes. You may have had income, you may have had taxes withheld and may get a little bit of refund. So yes, you need to file your taxes anytime you have income, just to be sure. But also because especially because we're living in a pandemic and with the new administration, and hopefully if Georgia can flip the Senate, there are going to be some profound changes in Congress and some bills that are actually get passed into law that will actually help everybody with real stimulus packages, like actual money per month to keep people to stay home until we get this thing figured out. So file your taxes, people. Let's see. Oh, this is a good question. I want to buy a house, but my credit isn't good. Should I do a credit repair program? No. You should go to NACA, NACA. Nafisa, do you follow me on Instagram? I do post a lot for NACA, but you can look up NACA, and I refer a lot of clients to this program. They basically, and all my nephews and cousins who are now over 18, who are like 18, 19, 20 in college, they're actually taking a NACA course this month. Actually, I think it's this weekend. But NACA, you get involved into this program. Doesn't matter if you have good credit or not so great credit. They look at your credit. They tell you what you need to do to get your credit together. And you can buy a house through their program with no money down. The interest rates are like 3%, 4%, nothing. Yep, NACA, that's correct. Look them up on Instagram and you'll see all their stories of the people who buy homes and then sign up online. You used to have to go to like the World Congress Center or wherever they were having the seminars to do the seminars. But now because of COVID, you can do the webinars online. And so there's some hoops you have to jump through with NACA because they're going to go through a budget with you. They're going to teach you about credit. They're going to tell you got to get these things together before we'll approve you. They're going to stick hard and fast to you qualify for a $150,000 house. Even if you fall in love with a $200,000 house, you qualify for a $150,000 house. And that's good because they're setting you up for success, right? I have a number of clients who listen to me, went through the NACA program, purchased their homes. Interest rates are like 3%, 30 years fixed. They didn't have to put any money down and are happy as a lark now. So check out that program. It's fantastic. Let's see. NACA is free. Yes. Let's see. We're believing in God that we're going to flip the Senate. Yeah, but let's make sure folk get out, child, or mail in their ballots. I will say my questions for next time. I have mortgage questions. Okay. So I'll try to figure out if I can make it like the same time every day, but it's kind of difficult in my schedule because I am retired, but I still do consultations. NACA's $25 a year. I didn't know that. But that's still nominal, child. So pay it. We pay that for coffee. But yeah, I'll try to figure it out. But if not, set notifications and y'all could just ask me anything. It could be about Ratchet Reality TV. It could be about some shows that's on. It could be about business. It could be about credit. It could be about my marriage. It could be about if I'm wearing a wig. I don't care. I'm an open book, real person. I'm happy to answer your questions. And make sure you follow me on TikTok, Instagram. On TikTok, I'm Buffie, just being Buffie. On Instagram, I'm Buffie Purcell. I post a lot of stuff in my stories about finances and taxes and especially things with regards to the pandemic and whether the government is coming out with new legislation and stuff like that. I try to keep everybody posted. Okay, y'all. Thank y'all so much. If I didn't answer your question, holler at me next time. Can we email you a question? Yeah, email. You're gonna email to my team, and they'll make sure that I get it. Because and then don't get mad at me if it's a few days, because I am retired, but I do work 3 days a week doing consultations for people. So the email is Hola, HOLA. That's my thing. I say Hola. At Buffie, BUFFIE LLC.com. And just say in the subject, Buffie told us we could post questions here, and my team will make sure that I get it and we'll get back to you. And what I'll do is I'll probably, if I don't email you back, we'll email you back, but I can answer. If it's like something I need to talk about a little bit more in depth, I'll promise that I'll do it and I'll let you know when I'll do it. Okay. Thank y'all so much. Y'all have a good day. I appreciate y'all. Bye-bye.
Crawl before you ball, and then take a little bit of the money. Please crawl before you ball, and then take a little bit of the money and save
Crawl
it, and then
before
do
you
something
ball, because wealth whispers and money jingle jangles and screams.
Buffy Purcell.